All right, so I did just get into a long just as we were kind of firing up the video here. This 2667 area is something we've been watching, and we'll see how this goes. Sellers coming back in right off the pit open here. We'll see if they can take out the stop below the swing here, then so be it. We got a really good entry price, and it lines up with our where we want to be trading from. No stop out yet. All right, that got us. That was a heck of a stop run there. I don't know how many of you noticed that, but that was pretty impressive. That had to have been like a close to 4,000 contract just immediately. Now today we have a clear line in the sand in the S&P, and it's this 54 to 58 area. Okay, this zone, let's just go ahead and highlight this on the chart today, and we'll keep it there. Above here, we'll be using our intraday framework just like we tried before the open there to get long, to find long opportunities. Within this, like that green line there is a long running top-down contextual approach, market profile, all kinds of measures of value and different things to come up with that. Inside of that, we will now be applying an intraday framework to find opportunities where we can, as long as that context is not violated. If it does get violated, that'll be a bearish line in the sand, and we'll look for our lower targets. Just for some continuity from yesterday, not my best performance. Ended up squeaking out an okay, acceptable performance on the day. But as you guys know, hypo 2, which was the first hypo of the day, even though I thought it was a little less likely than hypo 1. Hypo 2 was to be getting short from, what was it, like the 43 area, anywhere in this zone here. But no, 33 to 43, that's what it was, I remember. And so I attempted that a bit, and then I actually took a couple of scalp longs at pretty much the time I should have been continuing to stick with the thesis. Got a little too cute, a little too cheeky, and that cost me. That cost me this big move down into our first target area. I was able to get a later pullback down into this area here. And then there was a huge change in the order flow at the lows here. Very clear what happened there with some passive buyers coming in and whatnot. But that was that. I did not participate in the long. I was pretty much not really trading at that point in time. But kind of the lesson of the day for me was get a little cute with some scalps instead of sticking with your main thesis and hypos on the day. Sometimes that will cost you. Didn't really cost me in terms of losses, but it certainly cost me in opportunity cost. But on the bright side, I can tell you that the short trade that we got more than made up for the 5 scratches / losses that we had early in the session. And that's something you can hang your hat on when you can really manage risk like that. And not just, you can't just create that out of thin air. You can't say, okay, yeah, if something just doesn't immediately go perfectly in my favor, I'm going to scratch out of everything. That's not going to work for most people. You've really got to develop that skill and show that that is alpha generation for you, if you will, statistically. My younger developing guys that really want to scratch trades, I will say, okay, well, first of all, you can't scratch any trades. That's the rule at first. But what you can do, just watching this buying here. What you can do, Mr. Developing Trader that wants to scratch trades, is to now timestamp and journal and document when you decide, but not take the action because you can't right now, to scratch the trade. You write 9:36 a.m. I would scratch here. You've got to write it down, and you've got to be honest with yourself about it. And then you need to keep a running log of that. And once you get, let's say, 50 of those, now let's begin to even look at that, and let's see if you would help your performance or hurt your performance by making those scratch decisions. And most people that do the exercise truthfully and objectively, they actually hurt themselves by giving into the impulse to scratch out of trades. All right, so we did fill the gap. Did come into that yesterday's high. Little bit of buying from there, but then the high right here was our brand new RTH VWAP, actually held us down. All right, we did get back into the long here. Definitely a battle here after the gap fill. Not high confidence, but certainly an opportunity. Pretty immediately looks bearish again. Went ahead and got out of that trade. Had that RTH VWAP hold us down yet again. Tell you what though, that VPOC from yesterday is pretty fascinating. Man, did we do some volume just right in the same 2-tick range there into the close yesterday. Crude today with certainly some room to pull back. 65.70 being key. Could certainly pull back into the 64s just as even a natural normal part of a healthy uptrend. We have yet another very exciting and congratulatory announcement to make. I'll be doing so later when the markets quiet down a bit after the morning session today in the resources and general room. So get ready to clink some glasses over there. Just some really, really quality people that are joining our team, doing really great things with S&P futures. Couldn't be happier. So far, crude is the place to be. I think today's a very important day for the medium-term future of the S&P. One of those times where there's probably a little discrepancy between some people's overnight lows, depending on when you reset your charts each day, what you consider overnight. It could either be 55.50 or 56.75. So we'll definitely just kind of watch this little overnight low zone. Certainly a strange little held bid there. It looks like at the 55.75 level. You can see all those volume bars printing the low at the same area. I have gotten back into the long. This one being the first one from our actual main area of interest that we wanted to be long from today. For students of mine, this is a advanced play. This is a non-standard entry here. Lower probability of success here. Win rate, that is. Wait for the real setup if you're a student. Small scale there into the confluence of areas there, including RTH VWAP and yesterday's high. Very small, not a lot, just kind of mitigating some of this, what I would call counter trend risk based on the type of trade I'm getting into. Quality buying that came in just after we got into this trade, though. That's good to see. All right, looking for this next scale here, right into 67 area. As you can see, our target. Or at least our structural zone here. All right, another scale there. All right, took more off right here. Kind of a double scale into this point based on order flow and different things we're seeing. It's how important the level is. So quality read on order flow, taking that extra scale up here as we saw something, was not looking good. And it's not surprising to see the sellers, take control of the tape like they have from here. Do you think I'm upset that the market is all the way back near my entry price here? Am I angry? Do I feel robbed? Do I feel that, whatever? Would you? Detachment from outcome and simply focusing on executing well according to your process for executing trades, managing trades, getting into trades, getting out of trades. Focus on controlling what you can control, and that's it. Certainly stronger selling than we would want to see in an ideal scenario here. But we got a really good price on our entry from our main hypo and line in the sand for the day. So, and we got great scales, essentially 10 handles on the big scale into our next level. And we'll let the rest play out. All right, and we stopped out. So we came back through there. So that's one good trade, more than made up for the two small losses that we took early in the session. And rinse and repeat. That'll be it for the video today. We will still continue to use this great line in the sand here. Let's keep an eye on the strength of the sellers here and see what they've got. Other than that, we'll see you around. Trade well, be smart.
Many people want to be traders. They're passionate about markets, but they don't know how to accomplish the goal of being a successful trader. They don't know the path to achieve that goal. And it's easy to want to be a trader, but that doesn't mean it'll be easy to be one. And there's no easy path to any form of greatness, but there is a path. S&P Futures gives traders a way to move their trading forward, a way to rise above all those who try and fail. Whether you're just starting out or an established veteran, we have a place to plug you into our system and keep you moving forward down the right path. Maybe you need to connect with successful traders. Maybe you need training to develop mental toughness or find edge. Maybe you're ready to trade on our team, either remotely or on our New York desk, where you're backed by large amounts of capital, provided with world-class professional technology, where you work with a risk manager that knows you, within a culture of coaching and mentoring, at a firm that takes all the downside risk while encouraging you to become the best version of yourself. For those with the courage to make the journey, S&P Futures is here to move your trading forward.